Most entrepreneurs do not know their numbers, so sometimes they don't know if you're making a profit or going in the hole. Listen in as the two business guys mastermind on how to know your numbers so that you can profit and win in business. Enjoy. This business podcast, the two business guys mastermind, uncovers for you secrets and share tips and tricks to entrepreneurship as they mastermind on how to have startup, operational, and overall business success so that you can go on to get better results. Enjoy. All right. Hey, everybody. Welcome back. I know Rob's got to run out of here and do numbers lab. And this is what we're going to be talking about today. We're going to be talking about why your numbers matter. Rob, tell them numbers when you're starting off or whether you're a full-fledged business, they are everything. But yes, what do we mean by, know your numbers? You hear it all the time. What does that really mean?
Right. I think the one thing that I try to get business owners to understand, because this is one of those things, in my business, Randy, I help small business owners, I help big business owners. And a lot of times what people do is they go through and they're like, well, I need to get my operations better. I need to get my workforce. I got to hire better people. And I want you to understand that those are all symptomatic problems, right? Those are generally not the issue. Now, in a small percentage of cases, those are the things that I have to go in and we have to fix. But in most cases, if I go in and I work with somebody to learn how to lead their teams better, or to learn how to hire better, or to figure out how to get their operations running smoother, that isn't the real issue. That's just the kind of the issue that makes them feel better in the moment. But the reality is most companies that I go into are struggling with cash flow. That's the reason why they're paying attention to any of the rest of that stuff. Their money isn't right, and they're blaming their money not being right on a number of things that feel like they're the solution. And it's so important that you understand that there's three types of organ or entities, right, that do good or create social change in the world. Right? A business is one type of those entities, but you also have people who have hobbies that do a lot of good in the world, right? Think about all of the people that that are, part-time musicians, or it just is a hobby they go and play, or they play golf, beekeepers, all the rest of those types of things. They're doing well and they're providing value to people, right? And then you've got charities, right? Charities do a lot of the same things that businesses do. Now, what's the difference between the two? Because the key is they're giving value to the marketplace. What's the difference? The difference is that a business is organized in such a way that you can give value to the marketplace sustainably by ensuring that the marketplace gives you value back that is over and above what it costs you to provide that value to the marketplace. Now, that's a kind of in-depth description, but the whole key is a business makes money. Everything else costs money. Charity costs money. Hobbies cost money. A business, if it's truly a business, makes money. And there's a lot of people that get stuck. Right? There's a lot above expenses. Yes, makes money at the end of net money, right? And at the end of the day, there's a lot of people that get stuck having hobbies or having charities, but calling them businesses. And so today, what we're going to talk about is how important your numbers are for helping you to make decisions in your business. Your numbers, if you get them correctly, will tell you the future. They will tell you how to deal with things. You will be outside of the stress and the pressure of, oh my God, what do I do when life hits me? Because your numbers will tell you when life does this, do this. When life does that, do that. But you've got to understand your numbers. And there's so many business owners that are afraid to look at their numbers because they're afraid of what their numbers are going to tell them. Right. And I want you all to understand that, everybody. Right? Yes, me too. Right. And the key is what I've learned from being in that position is it's never as bad as you think it is, but it's always worse than you hope it is.
It's worse than you hope it is. Right. And that makes me crack up, Rob, because I know you're on a roll, man, but I remember times when the real estate, just imploded. Right. And I was heavy into real estate. It was generating revenue for me, right? I had a job at the time too. And I tell you, man, it was going down everything was going down. My stocks crushed. I mean, absolutely crushed. They were down 40%. Real estate, 45, 48%. Right. So I looked at the categories that they says that, well, if this is going down and you got real estate, you're fine. It was like, no. And then all of that was affecting the work. So people were getting laid off. Right. And it was like, man, I'm getting smacked all the way around. And it got to the point where I didn't even want to open the bills. I didn't want to see the numbers. I'm serious, bro. I would take the bills. Now this I don't recommend this. I would take the bills and collect them for a month and then tear them up and go, well, what's the worst that's going to happen? But because I did not
want to face it. Yeah.
I did not want to face it.
Nah, right? I've been in that same situation. So, and I mean, I remember when I had one of my first distributor businesses, I was working in a network marketing business, and I was making sales, but I was my number one customer, and I wasn't paying attention to how much I was spending and making sales. I was just paying attention to my vanity metrics, right? The things that you got promoted for in the business. And so I wasn't paying attention to the fact that while I was looking like I was doing great on the outside, I was actually in the negative as far as finances were concerned.
Vanity metrics. I want you guys to hear that. Vanity metrics. We're going to circle back.
Right. And it's one of those things where it's almost indescribable, the feeling of kind of lightness that one has when you know your numbers. I was just working with a client of mine the other day. And, you know, and again, I want you all to understand, from when you're solopreneurs, when you're just starting out, to when you're bigger businesses, this business makes $300,000 to $400,000 a year annual revenues. So we're not talking about, you know, small business. This is, you know, top 25% of small businesses in the country. But every month feeling like, why do we feel broke? And why do I have this kind of this fear of what the reality is, and not knowing that my business is actually going to be able to continue? And we did the work, and it took a while to get them comfortable with looking at these numbers, but they did the work, and the number was substantial, right? It's close to, you know, it's over $50,000 that they're in the hole right now. But the beauty of it, and you could see it in our conversation, like once they were able to face that number, it was like their shoulders just dropped. And there was just a sigh of relief, because once they knew what the number was, we can develop a plan to figure out that number. Again, they're making $300,000, $400,000, and they could do $600,000 a year easy. But the issue was they were afraid of doing any more because they didn't know how much worse it would get doing it the way that they were doing it. But now that they know what the problem was, they know what the number was, we were able to put together a strategy to pay for that number and to put together a strategy to make everything in the future go better. And I can't describe to you all the stress relief and this was, they were talking, my client was telling me like how much better it felt to finally be able to look at that stuff and to finally be able to say, this is what the problem is, and this is what our solution is. And now they know, they have a clear path forward. And so for all of you all that are out there that are in business right now, that are afraid of looking at your numbers, that are scared of it, that are trying to figure it out, I just wanted to let you know that there is a stress level that you carry around with you every day that is one of the reasons why your business feels so heavy. And this right here that Randy and I are talking to you about today, this is the solution to that stress. Wow, man. Numbers give you certainty, and numbers give you comfort. Go ahead, brother.
Yeah, we were just in a workshop, or a class actually, that Rob is a coach in, and I facilitate. It was all on numbers, right? And we played this game, and it was beautiful, right? You know, we don't, necessarily have to mention who and all that kind of stuff, right? Right. But anyway, so the main thing is, everyone, is that during this time, it was absolute chaos. Right now, Rob has, whole programs on how to calm chaos for you. Right. So if you're in your business right now and you're feeling it, and especially if it's before Christmas or whatever, right, calm the chaos before Christmas, if depending on when you hear this. So, and here's the thing, it was so chaotic because we put the participants under stress relative to cash flow in their businesses, right? It was certain scenarios that were presented that they had to pay for, decide on, right? Determine, but they had to look at their numbers and find out where the business was to make that decision. Now, it's not to say that you got to keep it all up here. Anytime I hear someone says, "Oh, I got all my numbers up here," and I'm going, "Well, you got a problem," because if you stop remembering, there's a problem, right? Using a spreadsheet, right? And I just did I did a workshop with an entrepreneur just a couple of days ago, right? And he has a spreadsheet called Profit Partner. He uses spreadsheet, man, and we rolled it up, and then we plugged in the numbers, and it'll tell you exactly what you need to do in your business based on your expenses. And they even make a suggestion. You should probably consider raising the price on this one, right? And we kind of described it as like, the business is the house, and then the different things that you do are the rooms. And entrepreneurs, we've got a lot of things, a lot of plates spinning, right? I've got over 22 digital products. That's not including websites and blogs and all that kind of stuff, right? So I've got at any given time 3 to 4 different business models, whether it's the affiliate business model, right? Or it's the email marketing business model, or if it's like one-on-one coaching business model at any given time. So now if you have that kind of scenario, you've got to know which ones are contributing to the house, which room is contributing to the house, and we're going to use that analogy, and which ones need to be cut off.
Yes.
Right. And if your expenses, come on now, this is where it comes down to, if your expenses are so great that they are not in service to the business, you have to look at those numbers and consider, where can I cut something? Yes. Right. And if you cut one thing, sometimes it's just one thing. Right. I got an entrepreneur that I'm going to be meeting with, and they've got a big loan that's looming over their heads, big one, right? And it's kind of making them feel like if I move left wrong, that loan comes due. But if I move right, I'm digging the hole deeper. The numbers tell you that. Spreadsheet, we don't have to have this stuff in our head. I'm not a math genius, right? But when that spreadsheet, I can look like one when I rock out a spreadsheet, or I can get somebody that says, look, I was showing a young lady the other day that had a cooking business. She has a cooking business, right? Bakes and all that good stuff. And I says, she says, well, I don't really know how to work spreadsheets. So that was causing her worry. And I says, let's go right over here to Fiverr, right? Or let's go right over here to Google, or let's go right over here, whoever you, people per hour, whatever you use, Upwork, doesn't matter. And says, do a spreadsheet for me in this area. And they will send you a spreadsheet for 30, 40 bucks that you can plug in the numbers as you go. That's what we're talking about. And that's the importance. Rob, we got to go into this more a little bit, man. I want to talk about these vanity metrics, boy.
Yeah.
Ooh,
now,
good, won't they?
Yeah, definitely. And I think that there's a couple of things, because, you and I can get really deep into this. I want to go kind of and drop it back down for a little bit for the entrepreneurs, and really talk about the basics of your numbers. What are the important things you need to be paying attention to? And I think that'll help us to differentiate between vanity metrics and real metrics. And then we can kind of go into, because I know that Randy has, like you said, the what did you say, Profit Partner?
Profit Partner
worksheet that there'll be a link to for you all to be able to use that down in the description. And then there's also a program for those entrepreneurs that are kind of like, I want somebody to kind of walk me through it, hold my hand, all the rest of that type of stuff. Randy and I work together, and I have a program called Cash Flow Mastery, where we do exactly that. We walk through, what is your cash flow? What are your things? And Randy and I can help you with that, to understand exactly what you're doing and where you're going, right? Because we want to be able to not just understand what your numbers are now, but we want to be able to understand what your numbers are going to be and what it's going to take for you to get where you're trying to go in your business. So let's walk it back and talk about the different types of expenses, because I think this is one of the things that a lot of entrepreneurs get caught up in. And this is what, in the class that we teach, this is what a lot of entrepreneurs get stuck on, right? So there's kind of two different buckets that you want to look at your expenses. And the first bucket is one that a lot of entrepreneurs don't pay a lot of attention to. So to get your business started, there were a number of different investments that you had to make. You had to make investments in training. You had to make investments in materials and equipment. You had to make investments in getting the business name and getting everything started up. So organizational costs and administrative costs, et cetera. Most entrepreneurs don't think of that money as money that the business owes them back. And I want you all to start thinking about that, to take a tally of how much you have put into the business before you ever got a dollar back. That's what you're going to call your startup costs. Now, when you get paid back those startup costs, that's a different question, but I want you to always have that number in your head, right? I want you to know what that number is, because eventually you're going to set your business up to start paying you that loan back. Now, the cool thing about it is you may have given the business an interest-free loan, but nonetheless, understand that you gave the business a loan. It didn't earn that money. It's not entitled to that money. And you don't just write it off and say, well, that was because I was putting into business. No. This is one of the first things that I want you all to understand, and it's important for you to understand as an entrepreneur. You are not your business.
You are not your business, everybody. Separate yourselves.
Yes, two separate entities. You want to have two separate bank accounts. You want to have all the rest of that. And here's the key. While your business benefits from having you as an investor, make sure that your business respects you as an investor.
Your business owes you.
Exactly. Right. So understand that knowledge right there. So have that written down somewhere. You can put it on a Post-it note. You can put it in a spreadsheet. You can put it wherever you want to. But I want you to make sure you have that number, because when you go back and do the math, that number will generally surprise you. Right. I always marvel when I have, business owners that come to me. They're like, oh, I might have put, $2,000, $5,000. And then they go do the math and it's like $15,000. It's like, exactly. Right. There's a lot of money.
Well, your business is not paying you back.
Exactly.
And with interest.
Exactly. Now that's the second piece, right? Think of it from an investor's perspective. You can make your business pay you back. Now, I know what you're thinking, but wait, my business ain't making enough money to pay me back. Exactly. But you've got to see it before it happens.
Still on the books.
Exactly. And so now you put that on the books and you make sure that the cool part about you being the president, CEO, chairman of the board, and everything else is you get to make all the decisions about how much your business is going to pay you back and when they're going to pay you back. What I'm telling you is, do not write off that loan. Make sure that your business pays you back, even if it pays you back 5 years from now or 10 years from now. Make sure it pays you back. Second key and second bucket that you have is then the ongoing expenses. So once you start making money, once you sold your first thing, once you've sold your first thing online or sold your first thing in person or whatever it is, once you've actually had income coming in, now you actually have a business that is transferring value. Now you have ongoing costs. You have monthly fees. You have variable costs, right? That we'll get into. And all of those ongoing costs, it's important to understand what months you have very high costs, what months you have very low costs, and what does your budget look like for the entire year. Now, why is that the case? There are some businesses that make 75% of their money from October to January, because that's the shopping season, right? And if you make 75% of your money from October to January, it's kind of important to recognize that just because you make 75% of your money from October to January, that doesn't mean that 75% of your costs happen between October and January.
Correct. So right? All you office dwellers where you don't need an office, it's a vanity to have an office.
Exactly. Right. And so the next thing that we want to look at are what are called variable expenses and fixed expenses. Now, variable expenses are tied to the thing that you sell. So if I sell secondhand golf clubs, right? So I go and I buy golf clubs from a vendor, or the knockoffs from China or from flea markets or from yard sales or whatever I do, and then I put them up online, right? I used to have a friend of mine that did this. He went and got them cheap, and then he would sell them online, and he would make probably $300, $400 a set just selling golf clubs. He was making great money, right? But if I do that, the variable cost is the cost that's tied to every one of those things that I sell. So let's take that golf clubs example. One cost that I have is I have to pay for the golf clubs in order to sell the golf clubs. Every time I sell a set of golf clubs, I'm going to have a cost. That's a variable cost. If I sell 10 sets of golf clubs, I'm going to have 10 of those costs. If I sell one set of golf clubs, I'm only going to have one of those costs. If I don't sell any golf clubs, I have 0 of those costs. It varies depending on how many of the item I sell. right? For those of you all that are using PayPal or using Stripe or using Square as your credit card service provider, right? And or for those of you all that are like Randy and I to use them all, right? That 2.9% plus 30 cents on every transaction is a variable cost, right? You pay 2.9% of $100. You pay 2.9% of $1,000. You pay 2.9%, right? And depending on how many transactions you have, that 30 cents goes up. So that's another variable cost. And it's important to know what your variable costs are, because those are what we call the cost of doing business.
Cost of doing business, right?
Right. You don't have a business without paying those costs. You can't make a sale without paying those costs. And so those costs are really important. But here's the thing that a lot of entrepreneurs get struggle with. They think that, okay, it cost me $200 for these golf clubs. I sold them for $500. So I made $300. I can put $300 in my pocket. And not so fast.
That's just revenue.
Exactly. Right. And that's what's called your gross margin or your gross profits, right?
That's right.
But that money is what is left over from your sale for you to now run your business and cover all of your fixed expenses. So Randy, you want to kind of talk them through fixed expenses?
Yeah, man. And understand this, everyone. I can tell you, and I'm going to talk to you from the perspective of mistakes, having made them, because I had the vanity to believe I needed an office. And every month that fixed expense of paying rent was there every month. And here's what happened. Here was the failure. I found that I was working more at home. So let's see if I got this right. I'm paying money at an office, but I'm working from home. So when you start thinking about that, right? You start going, wait a minute, that fixed cost is going to happen no matter what. And then, of course, at the office, I had to have internet. Wait a minute, but don't I have internet at home? Yes, you do. Right. So now you're paying two fixed costs, if you will, two. Oh, and of course, well, I had to buy some furniture. Now that's not a fixed cost, but it's still sitting there. That's got to pay. Now, if you bought that on time,
on credit, right?
It becomes a fixed cost. Well, I got it, but I gotta pay,
one of $15 a month.
$15, $20, $30 a month. Wait a minute.
Yep.
So all of these expenses that are coming no matter what are absorbable better if you have a nice little home office. Like right now, right? I have created a home office and I'm using, now this is the tip play here, everyone. I'm using the real estate of the office. That wall back there became a wall board because I bought some paint that I can paint that side of the wall that now allows me to go and write on the wall. Oh, wait a minute. Now you have taken what would have been a fixed cost and turned it into an opportunity for yourself to be absorbed, right? Another mistake that I was making, just put money in the business, like Rob said, $500 here, whatever, and then not paying myself back until I realized, wait a minute, where did all my money go? I'm making a couple of dollars, and I don't see that, right? So I used to have this term for it. I says, I actually did a contest once that says, who can tell me why you can be making money and still going broke? Really?
Yeah.
Right. And I think it was the young lady from Savor the Flavor. She actually won it. She says, because of this, right? How can you be making money and going broke? They almost didn't seem like, but because of your expenses and not knowing them, right? And you're generating this revenue and you're feeling good, right? And then at the end, you look at it and go, I'm broke though. That's how. Not recognizing where you could, take some things off the table, right? Do I have to have two utility bills? Do I have to have two heating bills? Do I have to have two cable bills? Do you have to have those expenses?
Yeah.
And I'm here to tell you, you do not.
Right. And even for those, right, because this is where we get to the vanity metrics that we were talking about before, right? Because even if you have, even in the home office arena, right, I've had subscriptions that I don't use. I've had different software packages that I don't use. I've had different things that I don't use. And I'm like, why? I remember Right. So, and this is, like ClickFunnels is amazing and it's awesome. And I love Russell Brunson and everything they do. But I remember I had the $300 a month package for a while, and I wasn't doing the type of numbers that type of a package required. Like it gave you everything, but it was $300 a month. I shrunk it down to, right. And so, and you think about that, annualized over a year, that's $3,600 a year. You can get the exact same thing in the $100 a month package. You just have less of everything. But if you're not using all of the less that you're using, I shrunk it down to the $100 package. I went from $3,600 a year to $1,200 a year.
Bro, I got
in one click.
That's $97 a year.
Exactly. Oh, no. And trust me,
building,
now I have
$7 a year. Now don't y'all be, hitting our look right now.
Right.
Think about what you're doing. Think about what you have. Put in the description field some of the stuff that you're paying, or in the comment section, put some of the stuff you're talking about. Wham! Just list them right now. Now, here's something that Rob and I also have developed, right? And Rob talked about his cash flow mastery, and I'm very, very good at being able to take something that you pay for and turn it into an asset. Again, the room, right? Let's turn this backboard here, all right? And I've got boards everywhere, right? I got one to my right, one to my left. However you guys are seeing that. And then in the back here, right? You can turn your whole room into things. How can you turn those things that are expenses, all of those software packages that you pay for? Now, here's something, and this is a tip. This is for you guys. Anything you pay for, find the means to then now present it to others. I do this constantly. I've got 40 or 50 different apps that I use, some that are free and some that are paid. But the ones that are paid that I have to pay for, I now become an affiliate for them. Now, you see what we're doing here, right? If it costs you, we're going to turn those costs into opportunity for us to sell.
Exactly. Right? And that's that. If you remember, Robert Kiyosaki talks about this a lot in Rich Dad Poor Dad Cash Flow Quadrant. What he says is, instead of going and buying a liability, you go and purchase an asset that then pays for that liability. So you wind up with a net zero or a net positive if your asset pays more than the liability is worth, instead of constantly taking money out of your pocket. And this is one of the things, gets us to that vanity metrics conversation, because the whole thing, a lot of people look at top line revenue. A lot of people want to have a 6-figure business. A lot of people want to have a 7-figure business, right? But one of the things I want you to realize is that top line revenue is a vanity metric. Top line revenue makes you feel good because it makes you right. Like, and I've gone through that whole process. And I tell you, when I was building my business, I remember one year we hit 6 figures, and I was excited. I was like, yeah, we hit 6 figures. We made $103,000. But then I looked at the bottom line, and I saw that we spent $105,000 that year. And I was like, oh, it doesn't feel like I thought it would feel when you make making money, but I'm losing money, right? And so we flipped it. And so the next year we increased 30%. We made $130,000, but we also, and this is the most important thing, we only spent $110,000. Now that was a great year, right? And that's cash flow mastery, right? Like now having $20,000 in the bank at the end of the year, that feels amazing. Having negative $2,000 in the bank at the end of the year, that's not the same feeling.
Been there, done that.
Right. And so the real metric that you want to look at is what's called your net income, right? So you've got your top line revenues, and you subtract out, like we talked about, your variable costs. That then gives you your gross profit, but gross profit is kind of a misnomer, right? Gross profit is basically saying this is all the money that you made on top of, but it's not really your money still, because the rest of your business has to get paid for. So I like to talk about it in the other term that the accountants use for, which is gross margin, right? Margin sounds better. This is the margin between what it costs me and what I could sell it for, right? But then you start paying your operational expenses. These are your fixed expenses. All the things we were talking about, your subscriptions, your rent, your utilities, your phone bill, yourself, all of that type of stuff are paid in that section. And please make sure that you're putting numbers in so that you can pay yourself a salary. Figure out, even if you're paying yourself $100 a month.
It's Rob, you said it I heard you say this one time in class. Even if you don't pay yourself, I want you to have it there. Right. And this is one of the first things that when I'm working with entrepreneurs now, I didn't used to always do this, right? But one of the first things I'm doing when I'm coaching them and I'm working with them, I say, what do you want this business to do for you?
Yes.
I kind of skip past the, the Simon Sinek whys and all that kind of stuff, right? I just says, what do you want it to do for you? Let's get to that. And if you can be honest about that, generally people want this business to make them more money than they're making at the job. Exactly. They want this business to give them freedom. They want this business to do things for them. So I said, okay, what does that cost? Right? Because oftentimes people don't want to, admit that they'd like to make $1 million. They don't like to admit because nobody around them is making $1 million.
Exactly.
Right? And I tell you, I had this entrepreneur, and he was feeling uncomfortable because his friends weren't making that kind of money, and he was killing the game because he created a product. And when you want to talk about margins, we're going to dig into some stuff. I remember this from college, and it's probably the only thing, but I know how to write papers and this next thing, right? No additional marginal cost businesses. That changed everything for me. It's like, and one of the examples they used was a movie is created one time and is sold multiple times.
Yes.
Products created one time, sold multiple times. Piece of content created one time. No additional marginal cost associated with that.
Right.
And you can break it apart.
Infinite.
Revenues are infinite and scalable. So now that's when I went into the total digital real estate space. I had somebody ask me the other day, hey, what is digital real estate? I says, well, we've got on-ground real estate where you can see it and it costs you a lot of money to acquire. Whereas digital real estate is something you can spin up and you can put small amounts of inputs and get a lot of output. Why? Because you create it once and it can scale forever and a lot. That becomes the key, right? And that changed everything for me. Yes. I got a guy I'm working with a little bit later this morning, and he's got a traditional brick and mortar type business. Now, the first thing I'm saying, I look at his digital presence, nothing. And I'm thinking the kind of business you got could be spewing off so much cash because you own it, but from an ancillary perspective, from another perspective, right?
Yeah.
From another way, not just online sales, but informationally.
Right. Multiple streams of income. Right. Like I remember even, because in my speaking business, like one of the interesting things about the pandemic, because when I started my coaching business, I was virtual. My first clients, we're in the Michigan area, but my first clients were in Boston and Chicago. So I was always virtual from the beginning of my business. So when the pandemic hit, nothing changed for me. But for everybody else who were used to being in person, and I did in-person stuff as well. I had in-person gigs, in-person speaking gigs, all the rest of that, which all dried up. But because I had virtual, and I was actually relatively good at virtual from having done it for the 2 years before the pandemic, what was amazing about that was I would then go and I got more clients and more opportunities because people would see me speak and see the fact that I was actually capable of engaging virtually. And it was like, oh my God, you need to know this person. You need to know that person. And it was amazing for me. So many people pigeonhole themselves into only doing one thing. And one of the things, and Bob Proctor said this, and I remember watching a video and I loved it. He talked about is multiple streams of income are necessary no matter what you're doing. Even if you're making $1 million from one stream of income, you need to understand that you want to have multiple streams of income. The average millionaire has 7 streams of income.
Yeah.
Just think about that for a second. And you don't have to have 7 streams from different things. Just figure out how you can make money 7 different ways from what you do. Right. Because what that does is it allows you that if anything is happening out there in the environment, you still have other ways of making money. Go back, and I remember I did a report when I was in school on Michael Jordan, and this was, back before, everything was all over the internet and people understood this. But Michael Jordan only made $2 million a year playing basketball. But he was making $38 million a year from endorsements. I just want y'all to think about that for a second. He was making 19 times his NBA salary every year from something else that was built off of the fact that he was really good at basketball.
So that's the core. You think about this analogy again, the house that can create many rooms. When I created our Bridge Business Institute, I did it with that purpose in mind. First, it was, well, I wanted to be the house, and then I wanted to create multiple rooms because my interests change, my curiosities change, and I wanted to be able to, pursue them, but I wanted to be able to pursue them businessly, right, by creating another room. So if I said, well, our Bridge Business Institute does what? Well, it goes out there and creates operating businesses. I am able to look at different business models, spin something up, try it, and then from it, teach.
Exactly.
Now you got,
yep.
So I want you guys to think about this. Look at your business and ask it one question. Business, and this is what I do. Business, I look over there at that business and I go, what else can you do for me? And the business goes, well, what do you want to do? What are you curious about? What's the problem out there? Let's go find the problems. And I'm telling you, Rob, like I was telling Rob earlier, I spent all day Friday just looking at things that people are searching for online. Go find products, bring those products in. And I saw some customers that I knew, right, from your dealings, from the people you talk to, from the events that you've gone to, that you go, I think they could benefit from this, and send them a message. Hey,
there you go.
And then didn't send a message of, hey, pay me some money. I saw this. I thought you could use it. Here's how, a little bit of the how, right? A little bit of the how. You don't have to sell the whole how, but here's what I've got a tool. I've got some software. I got whatever, right? That here's how you can turn whatever you're looking to do into something else. If you have a little bit of understanding of the business, you can say to them, hey, I noticed you're doing this in your business. And I love doing this part. I did actually this on Wednesday. I looked at a guy's business and I says, I noticed this thing you just didn't include some keywords that would make you get, organically rise up in Google. So I noticed, and I really was able to, listen to his whole podcast. And I says, I think you're missing some opportunity here. So if you want to talk more about that, just click here, get on my calendar, and we can do it. Right.
Now, what Randy just explained to you, we talked about in depth in a video, and we'll put the link in the description, which is how can you give things away for free but still make money? Because what he just did is he's showing you, he just walked you through the process again, how you can give value, but make sure that it comes back to you. And this is the key. And this is where it ties into our lesson for today. When you know your numbers, you can feel more comfortable about the stuff that you're giving away for free because you now know how that attaches to, how it applies to the metrics and the things that bring you income down the line. And here's the most important part, because a lot of you all give stuff away for free and you have people pay for stuff, but you still feel broke. And the reason you do is because you're looking again at that vanity metric of top line revenue, instead of looking at that real key progress indicator, that real KPI of net income. What's going into your pocket? What is your business making on every one of these sales? And once you start understanding that, again, it frees you up to start looking at your business as a value creation phenomenon, because what you're able to do is to develop and create value, give value to the customer, because you know that that value is going to return back to you twofold, threefold, tenfold, 100-fold. And that's the key. That's the key to cash flow mastery. That's the key to running a business that actually is an asset rather than a liability, that is not a money trap. That's not where you're just constantly paying money out of your pocket, but it's actually paying you back.
Okay, y'all heard it, right? We didn't want to get too much into the weeds. I know KPIs and, additional marginal cost. And if some of that went over your head, that's why we're here, right? That's why you can, leave comments in, leave messages in the comment section, ask us questions on this stuff, get in touch with us, right? Look at the website, some of the stuff that we put up there as helps. And we're expanding all of this stuff, right? And in this season too, as we start thinking about how else can we be of value to you right now? Again, I'm going to repeat this over and over again, right? I do some stuff in the crypto space. I'm doing something, and Rob is coming up and understanding this stuff even more. But we didn't want to hit you with all that because people are out there running real businesses, right? And not speculating or anything like that, right? Right? Not
Mm-hmm.
being investors in another space. So we wanted to talk about these things, and they seem kind of simple, but they are the most important things.
The fundamentals are the
The
fundamentals for a reason.
fundamentals. Because once you go into your crypto spaces, once you go into buying your Dogecoin or whatever you're buying out there, right?
Mm-hmm.
Once you do that, now you understand some of the fundamental things that make businesses successful. And as your business runs up or runs down, you can kind of look at it and go, I know my numbers enough, right? I have developed a degree of cash flow mastery because you've gone through Rob's program and you've talked or you listened to what we were doing. This is the thing I think that can make all the difference in the world. And if you can explain that to somebody else, now you've created another stream of revenue for yourself.
There you go. All right.
Okay, everybody, we're
It's
going to
been
get out of here
another
today.
great weekend. Great talking to you all. Appreciate you all
Yes.
continuing to rock with us and roll. And let us know in the comments how things are going. I love seeing the comments on our Facebook posts and on our YouTube and everything, letting us know that you're watching and that you're enjoying it. Just keep it going. And remember that this is a marathon. It's not a sprint. Don't feel like you got to get everything done all at once. You're going to get there. You just got to keep putting one foot in front of the other.
The two business guys have masterminded again. All for you. Let's talk soon.
All right. See you later.